AC, everyone knows the story. Only 8% of Indian household has AC penetration. A company investing 15,000 crores in a capex. And that's a very big number considering that the company's whole yearly revenue is around 13 to 14.
I was just going to ask you this question,
Yes.
so the viewers also get context.
We are continuously talking that downturn hai. But I think what went wrong, that is something. So one thing is pretty clear that the company is trying to be less cyclical.
But what's interesting is that their EBITDA growth is the highest in the industry, where the entire industry is in the range of 25 to 27%. Their EBITDA CAGR is supposed to be 36%.
Hi guys, so we are back with another podcast where we discuss different companies from different sectors, and we try to decode the business of those company, and we try to answer the most important question everyone is in the market, that पैसा कैसे बनाए. So I think today we are going to discuss a very interesting sector, chemical sector. The sector is going through a lot of headlines because there has been a significant downturn going on in the sector in the last 2 years. Yes, and the prime reason for that is the Chinese dumping. Everyone is suffering from Chinese dumping. Plus, there are some companies which are having some of the issues on their own, especially if they are having products which are facing a demand slowdown also, because global economy also in the past 2 years has not been that very good. Because
Uncertain times,
very uncertain times, especially Europe economy. And because of that, so many chemicals players here in India which are dependent on these markets are also facing the brunt of this particular downturn. But the company that we're going to discuss today, actually the chemicals and the products made by this company are used in everyone's houses as well. Daily lifestyle. So SRF Ltd is what we're going to discuss, and SRF makes those gases which are used in your refrigerators and ACs. So AC, everyone knows the story. Only 8% of Indian household has AC penetration. So based on that, people tend to focus on AC stocks, or maybe the manufacturer who make ACs, like a backward integration.
And also, just to give a context, here we are in mid-single digits, but countries like Thailand, Vietnam, and China,
they are also having very high
40%.
But I think that story is pretty much known to everyone. But what people miss is the value chain. They only focus on the front face. But what goes into the back end? So for example, SRF makes those gases basically, which are directly used in the ACs. And now, as the global climate issues and all become more and more aware, people become more aware about those. I think the more responsible and sustainable chemicals are in the use, and SRF is exactly doing that. So kahin na kahin that also helps SRF also, but that's not the only business that the company is doing. Slowly and steadily we'll discuss about the story and all, but I think the big headline stays that the SRF, a company investing 15,000 crore in a capex, and that's a very big number considering that the company's whole yearly revenue is around 13 to 14.
I was just going to ask you this question, so the viewers also get context.
So you're earning 100 rupees every year, and you're investing, let's say, 110 rupees for your future. So that's a very big bet that the company is taking. So I think we try to answer that question itself, that will that bet will pay off itself. But before that, I think we'll take a step back and go through the whole journey of SRF. So company was started back in 1990s. Simple tire cord manufacturer. It's a technical textile product which is used in your tires basically. It's like a thin cord which is used in your tire to
those beads type.
Okay. So very simple product, nothing special in that. But what company did exceptional was, over the years, it had become a biggest player in that particular thing. But company knew that there is going to be a slowdown in growth in that particular segment that the company operates in. So what company did, a sort of pivot. So they used their cash flows and earnings from the tire cord business to focus on their newly segment, which is on the specialty chemicals and packaging films. That is also very interesting. So company used the cash from their traditional business and pumped those cash into this new entity. And now, fast track to FY24, that tire core business is basically they started is only 40%.
I was just going to ask, are they still continuing doing that business or no?
So only 14% of this business is now on the original front. And the chemical business is around 48% and packaging films is around 34%. So quickly we'll go through the business segment. Chemical business or a specialty chemical business, there they manufacture fluorochemicals, refrigerants that we talked about, and other specialty chemicals, and particularly the company's chemical found its use cases into the agrochemical sector. So there also again we'll get back to the point of the slowdown. Agrochemical company also faced very slowdown because of the erratic weather situation and all. So that also somewhat impacted SRF in the past. Then there is a packaging film business where they use that BOPET and BOP films. Yeah, so that those are used in your day-to-day plastic use. Coca-Cola का जो bottle है उसमें जो use होता है that's a BOPET film. So again that is pretty cyclical business and it's used in the flexible packaging kind of a thing. So वहाँ पे भी supply demand dynamics keeps on changing, and once the market get oversupply and then the again the prices fall and then again the supply go down and the demand go up. So it's a very cyclical business. Third is pretty much technical textile that we talk about, the tire cord manufacturing, the company's original business. And the fourth is very small segment where they make this coated fabrics and laminated fabrics. So it's only 4% of the business. So I think we'll keep our focus onto the main part, which is the specialty chemicals, because out of the 15,000 crore of capex, now I would like to clarify that this capex the company has planned on doing from FY24 to FY28. Now this was announced back in FY23 and then they started deploying that. So it's a 4 to 5 year period where the company will deploy those particular cash. But even that, it's a very significant number.
And it's a good strategy considering, as you mentioned, the industry has been on a downturn.
Yes.
They're investing during the downturn so that they could reap the benefits
when
this particular
when
the cycle turns.
Yes, correct. But we are continuously talking that downturn hai. But I think what went wrong, that is something. That is something we need to focus. First is the global slowdown that we talked about. All of the countries, major countries, which are the export market for the chemical players in India, they were facing a slowdown in demand. So because of that, what happened there? In the anticipation of a higher demand, they stocked up. Now, जब demand आता नहीं है, so there is this thing called destocking. So for example, if I am buying a chemical from you, anticipating then there will be a higher demand, but वो demand materialize नहीं हुई,
तो inventory पड़ी रहेगी.
Inventory मेरे पास पड़ी रहेगी. And then what will happen is that inventory also I will try to sell at a lower prices because कहीं ना कहीं तो खाली करनी, because मैं बेचूंगा नहीं तो फिर मुझे पूरा लॉस होगा. At least मैं 20% lower पे बेचूंगा तो मुझे सिर्फ 20% लॉस होगा. So that's called a destocking. Across the board, companies' products, and I think a lot of chemical companies also face that. They face this particular destocking thing, and there was a pharma, because companies chemical are using also in the pharma. So there was also a very sluggish demand there also. And there was this refrigerant gas prices were also falling because of the oversupply. Now a Chinese dumping played a very big part in this. Chinese player, they don't prioritize profit, they prioritize that manpower and more employment will happen. So that's a pretty known picture. So because of that, China dumping added further pressure. That was for the chemical business. Now packaging business, there also, as I just mentioned, it's a very heavily demand supply dynamic business. So that global oversupply was there of that BOPET and BOP film, and because of that, I think margin were down for the SRF. And third, technical textile, although it's very small segment, but there also they didn't find any refuge because their margin pressure, and there's this particular raw material that the company used, it's called as caprolactam, which is further used in making those tire cords. So there also prices were shot up of that particular segment and the profitability was tougher. So I think what happened was numbers earlier when the company used to see 30, 35, 40% of revenue growth. In FY24, revenue actually declined by 12%. So that's a pretty
stark difference.
Yeah, that's a pretty big gap. And EBITDA margin at the same time went down from 24 to 20%. And even I think this particular pressure on margin is we are seeing until FY25 also, start of the FY25, because in one of the quarters, just last couple of quarters, this margin also fell to 18%, 24 to 18. So that is evident in the numbers as well. And but interesting thing is going, because just in the last couple of quarters result, there are some signs of recovery, and that's why I think you also were interested in this company, because demand in fluorochemicals is improving and price stabilization in specialty chemicals is also happening. But what makes SRF interesting is that now they are at a very good inflection point, because particularly because of their capex.
Capex, yeah.
Because I think 50% of their capex, which is around 6-7,000 crore, is already done. So अभी capex किया है and the scenes are looking good. So where is this capex? That I think is the next question.
Fair enough. So as you already mentioned कि हाँ company पहले अच्छे से grow कर रहा था, but in the last 2 to 3 years slowdown आया, and we discussed कि हाँ now the company is doing capex, but what is also important is to see कि भाई where is this capex coming?
Yeah.
So and so I think as you mentioned, from the period of FY23 to FY24 to FY28, a 15,000 crore capex is coming. So out of that, I think around 12,000 to 13,000 crores is going to come in the specialty chemicals division, including majority of the chunk is going to come in the specialty chemicals division. And basically this is to cater to the industries like semiconductors and EVs, basically for future industries or the industries which are in the sunrise mode right now. And I think fluorochemicals are also involved in this particular thing. So if I give you exact bifurcation, I think around 11,000 odd crores is for specialty chemicals, and 1,000 to 1,200 crores is in the fluorochemical space.
Yeah, so that they also consider into the specialty chemical segment. So if we total it, 13,000, 12,000 crores is for the chemical business.
And majorly all this expansion is happening at the Dahej site. So they have commissioned I think 9 new facilities in FY24.
Okay.
And basically, and over there, what they are doing is they are trying to manufacture those chemicals which are present in the pharma value chain. So basically, they make those advanced intermediates.
So that can again, I think, come under the CDMO play.
CDMO
because,
play. We could see that happening, yeah. And considering there is so much noise and
CDMO sector is very focused right now. So if that is something that the SRF is trying to capture,
it could be a good play. Yeah, and then as you already mentioned that they are also into refrigerants and stuff. So I think they are also expanding in that particular space by making capacities for the R32 kind of a gas, which again is
very important, because R32 in particular, it's a hydrogen based refrigerant. So hydrogen is very less polluting compared to what carbon based.
So basically they are also eco-friendly,
and it's not a small. In particular, that plant they are investing around 1,200 crore only in that particular plant. That's a very big commitment in terms of the sustainable chemicals.
So that is there, and then again as you explained that at the same time they are also getting into newer product developments for the future, for EVs and the coatings part which you mentioned.
That is where they started as a tire cord manufacturer. At one point they must have invested heavily in the R&D to do such a big pivot. So I think they're still continuing, 1 or 2% only of the revenue, but at a scale that the company is going, even that 1 or 2% turn out to be a big number. Yeah.
So yeah, that is there. So and again 50% has already been deployed.
Yeah.
50% is to be deployed over the next 2 to 3 years now.
So one thing is pretty clear, that the company is trying to be less cyclical, because their tire cord manufacturing company already saw what happened. They quickly pivoted. Their packaging film now, what they're saying is, it's also very high.
Very cyclical.
Now they are doing again sort of a small pivot kind of thing toward the chemical business.
And within that also they are looking at different sectors. That is there, and then they are also
high
looking
growth
towards
sectors.
Pharma as well. So again there is
pharma is
trying to shield their revenue sources from the
and the pharma sector that you mentioned, it's pretty critical, because there this China plus one theme is also going, where any good player from India showing the capability of a good CDM on something, they're getting a major chunk of orders also. Once
because everyone has started shifting their
and once an example is Ami Organics, because it is also, the company did not expect that much order flow, and that they got. So that is also very interesting.
Yeah, because their CDMO business is also poised to grow from about 80 crores in FY24 to 1,000 crores by FY28. So that is a big jump again.
Yes. So I think very right choices by SRF, at least on the face of it. Of course, half of the capex is yet to be done, and we are yet to see the full benefits of it. But at least what we are seeing right now from the company and the industry point of view, I think this company is poised for a very good future, at least.
That is there, but at the same time, we also have to look at how does the company,
because
stack up against all the
everything
other
comes
players.
at a price. And so, what's the price of SRF?
Bhav Bhagwan Che.
Bhav Bhagwan Che.
So yeah, again, so just as we were doing that industry analysis as well, so I just, saw that point that, SRF's revenue growth over the next 2 years is comparatively slow than the industry average. Not all the players, but when I take an average of the players, so that is at around 18%. But when if you look at the industry, it is at something around 21 to 23%. So they are almost there, but still they are at a slower pace. But what's interesting is that their EBITDA growth is the highest in the industry. Where the entire industry is in the range of 25 to 27%, their EBITDA CAGR is supposed to be at 36%.
Okay.
And that is all the reason behind this is, as you mentioned, that there was a dip in the FY24 margin. The margin.
So that low base benefit will also.
Yeah.
But again, that low base benefit will across the board.
Across
So
the board, it's not just
happening
happening with SRF.
Correct.
All the companies face that margin contraction in this particular
and the low EBITDA.
Yeah. So basically what is going to happen is, so the EBITDA margins, which are currently at around I think 20-21%, is supposed to reach to 25% by FY27.
Like a historical average,
Yeah.
if I remember correctly, it's around 24%.
Yeah.
They were sustaining back. Okay.
And
so
the
more or
reason-
less in
yeah.
same rate.
And the reason behind this again is the operating leverage will start playing out as as in when the utilization
Whatever
starts.
even the 50% of
Yes.
capex is done, that has started to come.
Yeah,
out.
that will also start getting utilized in a better way.
But I think another thing, indicating this big mismatch between the revenue and EBITDA is that the capex is newly done. So it takes a bit time to get the utilization level higher. So that as the company start, but on the EBITDA front, it's beneficial because the fixed cost remains fixed.
Remains the same.
But as the revenue, even there's a slight revenue increase, the EBITDA
there will be a
goes
greater
further.
jump in the
Greater
EBITDA.
jump in the EBITDA, and that's what we, I think, called operating leverage. So I think those are the reasons.
Yeah, and I think currently it's valued at around I think 40 to 42 times its 1 year forward earnings, and it's pretty much at a, I can say, at a slight premium compared to the industry right now.
Yes,
But
I think
then
35 to 40 is
Yeah.
what the specialty chemical companies, especially the ones who are ranging the EBITDA margin between 20 to 25.
25. So,
So,
but
yeah, slightly.
then again, but given that
But
they
there
are
are some
getting,
factors in
given
favor
again
of
there is
SRF.
aggressive capex happening.
But
there
I
are
don't think
these
any
kinds
other
of-
player is doing this aggressive capex.
Not this aggressive, yeah.
Yeah.
So I think this is the only company which has been so much aggressive into the capex and over such a long period now. So that has been there, and because of, and then there have been early signs of recovery as well. And the point you mentioned of operating leverage. So already because of that, the stock has had a recent run up.
Yeah.
By I think of around 35 to 40% run up in its price already.
Since the first January.
Since year to date, yeah. So 1st January, so yeah.
So in like 2.5 months where the
Yeah.
market is not so.
But SRF is in
Green.
a
SRF is
opposite
very
direction,
green.
yeah. So then again, so now again the question comes, if SRF is already at a premium, then what should one do? There's only one thing, that you need to track how the company is executing its plans. Because at this particular valuation, execution will remain the key.
And I think we're seeing 1 year forward P, right?
Yeah.
But that growth, as soon as it start to pick up, the earnings growth will also be higher because it will be fueled by an operating leverage. So in that case, if we take a bigger picture, then that growth might just compensate you for the higher valuation which is currently trading. So that will be again very key monitorable, and I think that's something you will only need to do because we are not advising anything here. We're just here doing the educational and analysis purposes. So do consult your financial advisor before that. I think before that, there's also one segment that we do, opportunities and challenges.
Yeah, so
Because-
what could be...
Yeah, there are always going to be other side of the coin as well. Opportunities, of course, as we said, that the increased penetration of ACs, the self-reliance of chemicals that India is going, that Atmanirbhar thing and all, that can give SRF an edge, especially considering that they are more into the sustainable chemicals part. again, fluorochemicals, and something the company is doing is increasing their pharma thing. So that's a very big opportunity. If that turn out to be the material thing, and the company is able to execute the order, whatever the leader they get in the early phases, then it can propel the another order wave for the company. And of course, as we mentioned, that the companies also have investing in R&D. So that can also come as a new innovation in chemicals, or maybe the existing chemicals newer version, which are more efficient, less polluting,
and sustainable as well, as you mentioned.
Yeah. So those generally have a higher margin opportunity, at least in the initial phases. So these are some of the opportunities that the company can capitalize on going forward. But of course, there might be some challenges also.
So again, challenges, same, supply chain disruptions. Just say, there was this Red Sea ka whole crisis wherein the costs had gone up because of the logistics issue. Material,
but the supply chain issues.
That is there again, it could impact their operations. Then again, as we mentioned, it's present into highly cyclical businesses like packaging films.
I think 40% of the business still come from that.
And agrochemicals may be unka presence. So again, if there is a downturn in the end user industry, obviously SRF will get impacted.
But that is also that company is very smartly tackling.
But then that threat will be there on the company. And again, as we mentioned, the key thing to track the execution of their capex.
Yes.
Are they able to execute their capex on time? That is also key monitorable, because if they are not, the market will definitely get disappointed.
Yes, because it's a very big number.
Yeah.
And the company has also taken somewhat that also on the base. So only by the fruits of this capex they will be able to repay that debt.
Yes.
If that does not materialize, then yes, there is going to be a punishment from our.
So yeah, I think
that's pretty much it.
Covered.
So I think to conclude, SRF, a company which has done a couple of pivots in their history, starting from 1999 to a small tire cord manufacturer to now a big giant in specialty chemicals, market leader in some of the segment that it works. And now, when the sector is on the verge of turning around, at least the early signs, the company is ready with the 15,000 crore war chest. Now the question and the key thing to monitor is how and when it can capitalize on that particular strategy. And yes, I think that's it.
So that's it. That's a wrap.
So definitely the stakes are high, but I think so are the rewards. So if you want the reward, you will need to
dig deeper in this company, guys.
But yeah, definitely watchful company. SRF might not be another MRF, but it can
might or might not.
Might or might not. Yes. Yeah. No one knows who's there in the future.
Yes, I think that's a wrap. And before we finish, so there's this one interesting activity which we do at our company, so if you guys have your existing portfolios and if you want to get them reviewed, just click on the link below in the description and you guys can send in your portfolios. We'll do a free portfolio review for you and give you suggestions on your existing portfolio. So do check that service out.
And our professional will review your portfolio and will give you a good advice.
So yeah, like, share and subscribe.
Yes, so like, share, subscribe, and see you in the next one. Bye.
Yes.